Hello traders. So we are going to be looking at bank sponsorship. So welcome to this lesson. Today we are going to be looking at what bank sponsorship is and how you can identify it in price. So bank sponsorship actually I'll say is just a way of gauging. There's a balance between order flow and how you can know that the order flow maybe is shifting or this significant price move that is about to occur using bank sponsorship. So that's actually the significance I would say with bank sponsorship. So what is bank sponsorship? I know there's an elephant in the room, so I was just trying to illustrate that bank sponsorship is like the elephant in the room. You can't miss it. You have to it has to pop out. That is how you can identify bank sponsorship. So actually this is where you see an obvious movement in the market that comes in with impulsive price action that stands out. So what I mean by this is that you want to see movement that is obvious and that is dynamic. So it's not something that you can guess, is it the one or not? It is something that you just see in price action. So I'll recommend that it's only relevant when you see it in the monthly, the weekly, or the daily charts, because actually these are the time frames that the banks are using to maybe to place their orders or something of the sort. So you want to be also focused on these levels in the monthly, weekly, or daily chart. So bank sponsorship, you should only identify it using these three time frames. So either of the three is okay in identifying the bank sponsorship. The daily is the minimum, so don't go any lower than the daily in trying to identify bank sponsorship. So how do you identify it in price? So higher time frame is the first thing. Like I've mentioned, you want to be focused on the monthly, weekly, and the daily chart. So on the monthly, weekly, or daily chart, you might find that there's a fair value gap or an order block that has been hit, or some form of liquidity has been taken, either buy side or sell side, depending on whether the market is bullish or bearish. So the second thing you want to see is an obvious fair value gap is visible. Once we hit that level, you want to see a dynamic price away from that level, leaving an obvious fair value gap. When I say obvious, it is something that you should just see clearly. This is a fair value gap and this is a dynamic price action. So it should not be there's no form of guesswork in identifying bank sponsorship. So as an example, I've outlined here bank sponsorship in price. And as you can see, I've started using the higher time frame, number one. So there's a higher time frame monthly fair value gap down here. And there's some form of liquidity that was taken in the monthly chart. This is a Euro USD weekly chart. So once we hit that imbalance or fair value gap, we are seeing that the market now, before it responded this aggressively, we are seeing actually it started by breaking market structure here, and we are seeing it came and broke here. So when it was breaking this market structure, we see an obvious fair value gap being left. So this is an obvious fair value gap. So this candle, I would say, is the one that indicated to us that there's bank sponsorship, because before that, down here, we were still bearish and looking at maybe potentially the market may be continuing lower. But once we see this and this dynamic price action, that is our indicator that there's bank sponsorship in this level, and we want to now look for buying opportunities. This is a weekly chart, so preferably if you're looking for buying opportunities in the weekly chart, it gives you actually a benchmark that you can use in the lower time frames to frame your setups. So we are seeing that this is visible in the weekly chart, and we are seeing an obvious fair value gap right here, and we're also seeing dynamic price action. So this is what I define as bank sponsorship, and this is what I think is relevant that you can use in your analysis of the higher time frame, coupled with now order flow. So once you see bank sponsorship, and of course we are seeing indications of order flow being shifted, then we can now use the order flow now to trade towards the next target. So this was also a target here, liquidity, and any other potential target above us or above the price mark currently. Yes. So just as an example, we have dropped into the lower time frame. This is the daily chart. So that same level after the market, actually we saw the weekly break above here, but now we're seeing the daily began. So let's say, for example, when it was coming up from that level, we were still not sure if the market was just retesting this range and maybe it will drop. So once it dropped down here, it revisited that area and again started breaking higher highs. So when we saw bank sponsorship in the weekly, this is the movement we saw. So you can see how dynamic in the daily chart that movement is. And we're being left with a fair value gap, which is obvious. Another fair value gap here, which could have been used to trade because we came back down there and reacted. So I'll say that is how easy it is to identify bank sponsorship. So the rule of thumb is this. You can use the same concept that I've outlined in lower time frames only to check if levels are being sponsored when framing an entry. So for example, maybe you have hit a daily imbalance or fair value gap and you're trading the 15 minutes. You can use the same rule that you want to see dynamic price action from that level of the daily chart once it is hit, and you want to see order flow now starting being established, maybe going high if you're bullish. That is how you can now learn or see that the market is being sponsored, and that level will be significant to move prices to the next levels higher. So that is the only way you should use lower time frames and bank sponsorship. So just a quick exercise that you need to do: go back into your charts, identify bank sponsorship that you can clearly see that occurred in price action using the time frames that I've outlined, either the monthly, the weekly, or the daily. And then you can now drop to your low time frames and see how the market responded to maybe levels, maybe in the daily or the weekly, once they were hit, maybe an order block or a fair value gap. And you can see the same thing repeating. So because the market is fractal, you can see the same thing repeating in the lower time frames. And that's how you can use that concept to now frame high probability trade setups. So thank you so much for watching. This is it for our chapter. We will be looking next on the next chapter, the weekly and the daily range. So actually we're getting deeper into the concepts, and I'll say that when we look at the weekly and daily range, you'll now get a clearer picture of maybe how, or maybe you're starting to now see how we can formulate a trade entry. Thank you so much.